Morning all. Sorry, technical problems this morning. Stream wasn't working for some reason, and I started the stream and it decided to go into a completely different stream. So no idea what happened there, but anyway, it's working. Morning everybody. Morning Peter, Christian, Ian, Danny, Virginia, JC, Dr. Post, Martin, Kennelly, Monkey Baggy Gooner, Andrew, Peter, how are we doing? Dev, morning. So we are on Tuesday. Again, very light news day today. We had Bullock speaking this morning at 1:18 a.m. Well, that's pretty precise, wasn't it? Retail sales for the Australian dollar this morning. There's no ADRs, so no real reaction to any of the news overnight. The only news we got coming up today is consumer confidence for the US, which doesn't tend to do an awful lot. Sometimes it's busy, but otherwise, no, not a lot. Morning, Zamalek. So just another day like yesterday, we may get some decent movement on just normal FX movements, normal strength, but there's no news events which would really trigger the market. Potentially that one, but we'll have to wait and see whether we get any movement off of that. Main news coming up this week starts tomorrow morning, which is the CPI for Aussie and New Zealand dollar rate. So that's where we're going to kick off tomorrow. That's when the first real moves of the week should occur. Overnight news, not a great deal that I could see. I had a quick scan through this morning. Retail came out as a negative on the Aussie. There's no more talk from the Bank of Japan over FX movements. Nothing exciting. It feels really weird, like we're already going into the Christmas lull. But don't know. DAX, we are gap down this morning. So we have had a down day and we have gapped down. So yesterday was the first real down day we've had. Well, it's not the first real down day. We had one in there. But on this entire rally, yesterday, we came off these highs. On Friday, we came off the highs. Yesterday, we actually put a down day in, and we've gapped down today. So I think we are potentially going to start this pullback. So today, what would be lovely is if we got a lovely quick run up to the gap fill and then turn tail and ran. But we'll see what happens. We are gap down. We might get a gap and go today. Quite a lot of volume south at the open, before the open. So we'll see what happens. But yeah, first down day on the DAX. Whoops, wrong one. Yesterday. So looking at targets today, last week's low is the downside target, which is within ADR. That's in that propulsion gap. Upside targets from where we are obviously is gap fill. And if it, for any reason we're going to carry on this bull run, we're going to need to get beyond ADR to come and retest last week's high. So we'll see where we go. But market's open. We'll see what we get today. Sure, the orders have gone in. So upside to our target today is below that low. So nice and easy to achieve if we are going to rally up. But it's a little bit bearish, a little bit heavy at the open. Morning, Dion. So while we're waiting for the open to kick in, that so I can see it easier. We'll have a look at the FX side of things. So from an ADR perspective, there's nothing so far today. No ADR runs today yet. We've got nothing on the weeklies. The monthlies we've already looked at. Yen and CAD, Euro US, New Zealand US. Yeah. So there's nothing new to look at really from the weekly perspective, which I wouldn't expect because we didn't have a massive run yesterday. So quite quiet. RSI is pretty much the same as they were yesterday. We've got no hourlies to look at today. Nothing moved fast enough yesterday to really get any movement. The only hourly RSI extension we had yesterday was on the pound US dollar. Yeah, there, which just tapped over the 70 and it's pushed back down again. So that's holding at the moment. If we get that break, we could start a little down run there, but we're going to need some US dollar strength today. So we need to wait for that news this afternoon, I think. Market's broken long. One R. So watching this pre-market high for a reaction. But I mean, obviously that is your first stop, which is yesterday's low. And then obviously the gap fill. So let's see if we can get that rally up to the gap fill this morning. If there's enough room or momentum. So there's no RSIs. The only RSI we had was the pound US dollar. I'll run through all the other RSI extensions and we'll see what's available on the 4 hour. I haven't banked anything this morning. The Euro CAD has come down and double bottomed on last week. So we're right at a potential support area here. So we need to watch this one, but got some profit I can take off of this one now. This is back into profit. Been in this for a while. Well, not a while, but a week. Not a long time, is it at all in position trading? But I have been in it a week. Already paid me. So I could close the whole lot out here now and just take that as profit. But we have butted into this propulsion gap a couple of times and bounced. We've finally broken it. We weren't able to get through that high yesterday. So we know that the sellers that stepped in here, or rather the sellers that stepped in there and got added to here, are still holding their lines. So I'm hoping that we're going to break this low today. If we break this low, then we're going to come down and test that area, which is my TP, which is within ADR. So I'm going to hold on to that. Excuse me. Hopefully we break that low. Everything else is just kind of flip-flopping around sort of a percent in drawdown. CAD Swiss is working nicely. So we are looking like that structure break that we had here after that multiple day accumulation is holding. And hopefully now we've got a low, a high, a higher low. We will be going for a higher high today. I'm undecided on target. Sorry, there's loads of cars hooting their horns outside the house. There's loads of upside potential on this, obviously all the way back up to here. This Canadian dollar hopefully will get some strength off of oil's movements, which hopefully will be bullish. We've got OPEC this week. But that area there is obviously going to be the first sticking point, which is just over 125 ADR today. So I don't think we'll get there today unless we get any really positive news on the US in the consumer confidence survey. But I'll make a decision on what to do when I get up there. Been in it for a while now and I just kind of want to get out really. So I'm trying to get this account flat before Christmas because I want to switch brokers. Not switch brokers, switch accounts for the new year. I've decided to run a slightly smaller account for position trading and a larger account potentially on scalping. Or actually, I might segregate my money down and have another strategy running as well to diversify a little bit more. But I'm going to decide that over Christmas period. So I'm just trying to run this account down. So I'm trying not to I'm hoping we're not going to get a load of volatility before Christmas so I can just get flat on it. But we'll see. But anyway, so that's the portfolio at the moment. Aussie CAD just gone sideways for kind of day 6 now. Aussie US pushing up. 3 positions on. Third one taken on that one yesterday. Still rallying a little bit this morning. CAD Swiss we've looked at. Euro CAD we've looked at. Euro US dollar. Totally sideways at the moment. Can't get anywhere on that one. Hasn't broken the highs, which is good. And then US dollar Swiss. which again, we've been sat sideways for 5 or 6 days. So all this, a lot of this is US dollar related, and obviously the US dollar is totally frozen out the back of the CPI move. So we need some news to kick the market into touch, really. No movement so far beyond the initial break. So sellers holding that level at the minute. It doesn't make any sense to break long, really, and not do the gap fill. But hey, if the market made sense, we'd be able to read it easier, wouldn't we? So it's probably going to break down now, just to annoy me today. DAX is very annoying at the moment. The problem with the DAX at the moment is there's no volatility at the opens. We are getting so little movement intraday. So, you know, open, close, open, close, open, close. That's not too bad, actually, that one. But we got a lot, you know, it's very up and downy, and then you get a big, strong push, which is just painful. There's no trend days. We haven't had a trend day on the DAX for ages. Last proper trend day we had on the DAX was there. We had one there. That's news. But, you know, it's just been sideways, 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 sideways. You know, even yesterday, you know, there's no real nice movement on the DAX. It's just painful at the moment. It's because it's been pushing too hard. It's run out of steam. Market's got no faith in going long. When you are that extended, you know, you got that many participants sitting on money, you know, everybody knows they're going to want to get out of some of that. So how has SIH done this month? I don't know. I haven't got it running on auto, so it's difficult to tell. Really. I'm not running SIH on auto. I'm intervening all the time, as you know, in here. So haven't really got any results I can give you. Do a back test. It'll tell you. Right, RSIs. Aussie dollar Swiss. So these are all 4 hours. Pushing back inside the opening range. Gonna hedge again today. I know it is. It's been one of those weeks. Aussie dollar Swiss, 4 hour RSI extension, only just. Not really a good entry. We've pushed up above that level. I'd much rather see us get a nice run up to 150, which will also probably give us an hourly extension. Yeah, so it's an entry, but as you can see, it's sideways. So we've been sideways for 3 weeks on this, really. So that's not really a great entry. That one's short. Want to see it push and then wait for a profit take move. Aussie US, big push up. Looking for pullback on this one. I've already got 3 positions on this one. Just extended again. Nice divergence. We looked at this one yesterday. So we've got nice divergence on this, which is bearish. Again, we need a news catalyst on this. If it doesn't happen with consumer confidence this afternoon, it's going to happen with the Australian and the New Zealand news in the morning. So we should get a decent move off of this tomorrow morning, hopefully. Euro odd. So nice extension, just it got extended to the downside. Nice support area I've drawn in there. Not quite sure what that is. Probably from another chart. We totally range bound on this. So, you know, you've got a range low coming up within 125 ADR. You've got a monthly low coming up within 225 ADR. So we've had a fairly nice run to the downside, but I mean, this is the sort of movement. These are the RSI extensions we're looking for. Strong push. This is choppy all the way down. Basically, they're pushing, profit taking, pushing, profit taking, pushing, profit taking. That's not the sort of moves we want to see get into RSI extensions. We want to see big, strong pushes where they're going to do big counter moves. So again, it's extended, just filled a propulsion gap. We are at a potential previous resistance, which may well turn support. It's got lovely wicks to the downside. Yeah, you've had a reversal on it this morning, but it's not going anywhere. So this one could well run. The buyers are obviously in control. You can see by the wicks. and it's a decent support. So there's loads of confluence on it. It's just messy, isn't it? Messy on the way. So that's not particularly great either. There's not a lot of setups at all at the moment. Pound US dollar extended to the upside. That's a nice RSI extension. We got a little bit embedded on that. Again, we're waiting for some US dollar moves, looking for it to come back down into that area. So that's a nice looking short. We looked at this yesterday. There was a reverse alert on it yesterday. So yeah, nicely extended, ready to go to the downside. Nice M pattern reverse. You can see on the RSI there as well. Look. So potentially it is starting to roll over. And it's been extended, for a little bit now, all week, basically. So I say all week, it's only Tuesday, but it's extended. So there's a potential for this one to obviously come back. So this is the CPI figures for the US dollar. There is potential for them to come back and retest this area again. We did test it once. Everything that's tested it has basically rejected it. So there is a good chance that we might get another retest of this level. So it has got quite a long downside, but it's going to need some really good US dollar news, which we don't know at the moment. We will find out starting this afternoon. New Zealand dollar, US dollar also extended on the 4 hour. That one's just about to roll over. Again, very, very choppy on the way up there. Not the best in the world. Probably get some kind of pullback on it, but not going to be massively aggressive. And same with these US dollar CAD. US dollar CAD's a little bit better. I've got position. I had a position on this one from Friday last week, which I got out yesterday. So it's extended again. It was extended on the hourly, which is why I got into it on Friday. It's just coming down to double bottom now, and you've got a 4 hour RSI extension. But again, I'd like to see them more extended. And it's kind of a sideways move, really, if you look at it. Not greatest in the world either. Again, we need some news to determine whether or not this US dollar is going to continue to be weak or it's going to strengthen up. So we haven't had any news really that's of any impact since the CPI numbers. So waiting for confirmation. US dollar yen was extended on the 4 hour. It's just come out. This is a tricky one. Are we breaking down or are we pulling back? Very hard to decide on this at the moment. So you can take this kind of either way at the moment. I think I would much rather be short everything against the yen at the moment. But if we get that Santa rally coming into Christmas, which will happen in the next 3 to 4 weeks, US dollar is going to be coming down, which means that the yen will power up, which means this will come down. So this is in a not a great spot at all. So we're forming potentially a new range at this level. You're bang in the middle. Yeah, so you want to be shorting it from there or longing it from there, really. So not great. It is extended. It was extended on the 4 hour, but it's not anymore. So nothing exciting to look at today, I'm afraid. Everything that I'm in and just waiting. We're just sitting, waiting for stuff to move. Which is a bit crap. DAX is pushing up, retesting high of the day, high of the session. So we've got an inside bar gone in. So initial cash balance, bullish. Inside bar. We're an inside bar on the inside bar, which is contraction. So if we break that high, we should get, I think, gap fill today. Got to break that high first, though. Market's holding that high at the moment. So see if we can get a pop. If we get a breakout of here, we should get a pop. Which should obviously get us to target, or get me to target. But not really going far, are we? FTSE did 2R, all out, good job. Must find a broker that's got the FTSE. Going through my list of brokers. I want a broker with leverage, though, not someone like Darwin X. Why is that not? Axie. I suppose I could go back to Axie. Oh my, what the hell? Oh, MT4 update. Look at the spread on that foot. So you can't trade that. Look at the spread on it. That's way too big. Can't trade that. So I'll rephrase that. I need to find a broker with a tight spread that's got the FTSE. Certainly not going to be Axie. What account is this? Where am I connected to? US2. I think that might be a standard account rather than a pro. I'll have to look up what account that is. That's too big. You can't trade. You can't scout with a spread like that. It's massive. So, but yeah, nice break on the FTSE straight down today. Pushing up now. DAX, we did get the pop, but not quite got there yet. If you say you want to get flat, how do you do that? Get flat, yeah, you would have to turn off the EA so you don't take any more trades. So it's a little bit early to be getting flat for Christmas. We're a month away. But realistically, you're actually only about 2 weeks away because the market will slow down second week into January. And it's into December. Second week of December is kind of when it starts to slow down towards the end of that week. Third week of December, definitely. So you... I'm kind of looking at it as if I've got 2 or 3 weeks really max before the market's going to slow down into a grind. So if I'm going to get flat, I need to start thinking about turning the EA off because if, you know, a typical position will last anything between 2 or 3 days and a week or two. So if I start taking a new position today and it lasts 2 to 3 weeks, I want to be out of that before Christmas. So I'll get to the point where I'll just turn the VPS off or turn the EA off on the VPS, turn auto trading off. And I will just manually manage the rest of these positions. Just to get flat, as flat as I can. Or take a tiny, you know, if I have to take a 0.5% loss or a 1% loss or something, I'll take it just to get flat. But I want to transfer the money out. So I need to be flat, obviously. You've been showing the VPS H1 hedging strategy. Telegram has a 0.2% risk, but you're running 0.1 on that account. I don't know. I'll have a look. Wait for that to load. Takes a while. Stuck at it at the moment. Which broker are you going to switch to? I don't know. I'll have a look at some brokers. I won't switch. I mean, it will just have another account. I won't switch. I'm not switching brokers for position trading. I'm just switching accounts. Moving my money around, basically. Am I looking for a funded broker? No. Trade Nation has tight spreads have MT4, but minimum £1. Minimum £1? What's that? Oh, they if they can't trade micro lots, I'm not interested. If that's what you mean, if you've got to use one lot or one contract. Day one of asking what's your account balance until my answer. Over 30, under 150. What's your net worth? What's your balance, Marion? Per point. £1 per point. As long as they let you, no, they won't then, will they? Because you need to be able to trade micros. You've got to be able to trade micros. Otherwise, you're not going to get the risk on. The problem with brokers that force you to use mini lots or standard lots is you can't control your risk. If I want to risk 0.75% of my account on a trade, I need to be able to go in 0.01 increments because I won't be able to achieve a 0.75% risk on a 0.1 or a standard lot. So they've got to allow micro lots. If they don't allow micro lots, it doesn't work. You've got to use micros. So if they only, so basically the easy way to tell, go and download a demo from any broker. That 3.86 you see up there, if you click the down button and it goes 3.85, 3.84, it's micros. If it goes 3.8, 3.7, 3.6, it's minis. If it goes 3, 2, 1, it's standards. You've got to have micro lots. So any broker with decent leverage that lets you trade micro lots is good for scalping, but you've got to have that spread. Spread is the number one thing. You've got to have a tight spread, which is why I use Forex. They've got really tight spreads. They just don't offer the FTSE. Axie offer the FTSE with micro lots, but their spreads like that. Yeah, so you just got to find that broker that's got the perfect conditions. And this is why I have multiple brokers, because different brokers have different conditions. At the moment, thankfully, I've got Forex kind of fits all. They have account types which fit everything. They even do cent accounts, which is brilliant because cent accounts is really good for testing EAs. You can test EAs with 100k balance, but only by depositing $100 because you can have 1,000 to 1 leverage on it. 8cap, no, not interested. 8cap are the worst broker on the planet. Do not use 8cap. IG offer micros. But I think IG in the UK to get micros is spread betting. It's not CFDs. I don't know. I'll have a look at IG again. I've got an account with IG. Hedging. 47% now. That is using 0.2% risk. So all the others are using 0.1. So this is my account. That's the ADR reversals. Yeah, so ADR reversals. Oh no, sorry, ADR reversals is using 0.2. That's using 0.25 on H4 because it doesn't get into many positions. Yeah, everything else, H1 is using 0.1. But yeah, the H1 hedging is using 0.2 risk because you're hedging, aren't you? So you're always offsetting your risk on every reversal alert. So, but if you want to run it lower risk, obviously you can drop it down to 0.1. All that's going to happen is you're going to make 25%, but you're only going to be sitting in 8% of drawdown. Everything you halves your profit, halves your drawdown. So I don't like this today. Total is just indecision candle after indecision candle for the last 15 minutes. There's no bias at all this morning. We've got 3 minutes left on this candle, so just let this 5 minutes play out, and we'll see where we are. What I don't like about today is the fact that we've rejected that pre-market high. We sold very hard from pre-market open. We just sold literally all the way down to the open. As soon as we've tested that pre-market level they started selling from, we immediately started selling again. So the guys that are selling here have added sells, which means that there's potentially an iceberg order holding the market down today. If we can't get through that level, everybody trying to get through that level is just going to turn tail and run the other way. We're going to short. So I want to see them get through this level within the next 5 or 10 minutes. If we don't, I've got a feeling we're going to drop. The US indices are all very, very heavy this morning as well at the open. Not going anywhere. Pepperstone are good. Yeah, but I don't think you can get the leverage with Pepperstone. I need to have a little hunt around, really. I hate broker shopping with a passion. Because they're all as bad as each other, but nothing you can do. Other than the gains, then are YKU, so I'm having to translate here, generally happy with the performance of SIH this month. Yeah. It's a lot more stressful than position trading. A lot more stressful, isn't it? Look at me. I'm sitting here having to watch this chart. Position trading just does it. It just makes money, doesn't it? This is way more stressful. However, it's as profitable. So it's just another way of, it's just another strategy. With when COVID hit, it was a real light bulb moment to me when COVID hit, with the way that trading changed. Everybody, the market contracted dramatically. I've said this before in here. Yeah. Pound New Zealand, I was trading 400 ADR. Yeah. Pound New Zealand now is 144. The market is half what it used to be. As it's half what it used to be, you can still make money in the same way with most strategies. However, the time it takes to extract the money is longer at the moment now, I've found. So the reason I started looking into scalping again, which is what I used to do, I just wasn't amazingly good at it, was because I needed to diversify, because you have to adapt with the market. If the market is like that, and then all of a sudden it comes and goes like that. Yeah. Before you were making that money. Now you're making that money. Yeah. If that money is smaller than that money and you need that money, you've got to find a way to supplement that. So this is where strategy diversification comes in, and running multiple strategies alongside each other. Because if you run, for example, a trend trading strategy alongside a mean reversion strategy, when the trend trading strategy is working, that one will fail. When that one is failing, that one will work. Yeah, because the market only has two conditions: trending and ranging. Yeah, which is why there's only three types of strategy: trend trading, breakout trading, and mean reversion trading. Yeah, there's only two things the market can do: go up and go down and move through time. So when a strategy that you've been using that relies on market movement like that suddenly becomes less effective, you have to diversify and find something else. The only way you can get more movement within a period of time in the day is by dropping time frame down. Yeah. So where I was trading H4, M15 for years, I switched down to H1, M5 because I needed to get movement happening faster. So the H1 RSI extensions happen more often and quicker than the H4 RSI extensions. The H4 strategy is still doing very well. It's just not doing as well as H1. When H1 stagnates, when you get to the point where you're sitting there in trades for 3 or 4 weeks and you're struggling to get those 20% months, 15% months in, you have to find something else to add to it. The only way you're going to do that, if this time frame is moving too slow, is to move down to this time frame, which moves a hell of a lot quicker. Except this time frame in Forex is just algorithmic chop. You're trading mess, and there is no form to mess. There's no structure. You can't use an RSI on a 5-minute chart. It's useless. So you have to find other ways of trading, which is where the opening range breakout and the hedging strategy have come from, because it's just finding a way to extract money out of lower time frames. You only need to get 5 to 10%, but you have to use more money to do it, a bigger account size. So it's not better, it's not worse, it's a different strategy that can produce a similar result, but in a different way and more stressful. It's a hell of a lot more stressful sitting here. If I sit here today, right, and we've done it, we did it yesterday, didn't we? In the US, sat there, and I was like, right, okay, we're an hour and a half into the strategy, into this session. We haven't banked yet because the market hasn't gone anywhere. That's stressful to me. You know, I've scanned through position trading this morning. I'm done. I'm just sitting here now. I'm going to check this 2 or 3 times today. Anything that goes green goes there. Anything that's red, I wait for it to go green. How unstressful is that? How stressful is it having to sit here tied to a chair watching this thing go up and down for an hour and a half and not make any money? Or get hedged or get stopped out 2 or 3 times and then going, crap, I've got to wait here for the rest of the day now to try and get that money back. It's not fun, is it, scalping? I don't know why everybody wants to do it. They're all attracted by the bright lights and shiny Lamborghinis, but it's not what scalping is. Scalping is high stress, high complexity compared to position trading, which is easy. Anyone can do position trading. Hit the sell button and wait. You're in profit? Brilliant. Hit the buy button. Get out. There is no stress. Just isn't stressful. This is massively stressful. Waiting for the market to do something and change its mind. This is why 5-minute timeframes are impossible to trade for most people. Every candlestick, everybody tells you to use naked charts, read candlestick patterns. Yeah? Read candlestick patterns. The candlestick patterns there changed from bullish to bearish 30 times. Which way are you going? It's impossible. Yeah? Which way is this going at the moment? Looks like it's going long. Yeah, well, it looked like it was going long there, and it looked like it was going long there. Then it looked like it was going long there when it broke out. Then it looked like it was going short. Then it didn't know. Then it looked like it was going short. Now it looks like it's going long. Which way is this going? I haven't got a bloody clue. Neither of you. How stressful is that? Position trading is just so much easier. I am in the CAD Swiss. I have been in the CAD Swiss for many weeks. I'm waiting for the CAD Swiss to move above that green line, and then I will take that profit and put it in my bank account. When's it going to go there? I don't know, but I'm not stressed about it. I'm just waiting. Patience. Trading's all about patience. Sitting here waiting for things to get to where you need to get to. This is about hoping that they get there within the next 10 minutes. Otherwise, oh crap, we've got to deal with this for the rest of the day. But everybody thrives on different strategies. I've got a plan for the new year to do kind of more. I had this plan last year as well. Anybody that's been in here with me for a year or so will know I had this plan last year. I've got this plan again in the new year, is to put together structured lessons within the live rooms on different subjects. And one of them is going to be diversification of strategy. And it's key. It's absolutely key. Yeah. This is why everybody system hops. You see an advert for a course that sells you some mechanical trading system that works on a specific type of trading, like trend trading. Yeah. If you join the course when they get you into 2 or 3 instruments that trend, you'll be like, I found it. If you get into the course when they introduce you to 2 or 3 instruments that go into a range and it's a trend strategy, you'll go, that's crap, and you'll move on to the next strategy. There's nothing wrong with the strategy. It works beautifully in that market condition, but that market condition, it doesn't. There's only 2 market conditions, sideways or trending. You've got to have something that takes advantage of both of them, which is why position trading is so good, and which is why I do it, because it doesn't matter if the market's trending or going sideways. Position trading is mean reversion. Mean reversion works in a trend and in a range. Right, we're breaking out. Finally. If this candle fails, I'm done. The speed of this morning is just like putting teeth in it. So then compared to pre-COVID, have you found you get lower percentage gain per month from position trading? No, it's not lower percentage gain. It's longer to get the... Everything's just... Oh, it's doing it as well. Look. Everything's just taking longer. So prior COVID and probably after lockdown lifted and everything woke up again, i.e. the stock market woke up again and everything started moving, I was basically making 5 to 15% a month, every month without fail. I got the occasional break even. Yeah, if you go back and look at the years ago live streams, what's happened is I am now experiencing average 10 to 25% months with the odd negative 9 to 10% thrown in 2 to 3 times a year. That's what has happened so far. So what's happening is the moves, the reason these months are bigger profitability wise is because the moves are taking so much longer to play out, meaning there are more positions placed, meaning there is larger lot size on. And when we get the big, strong move in our direction, because the larger lot size is there, I'm banking bigger. But the months where I'm doing drawdown control, because they are taking such a long time to play out, the 3-month pound US dollar position trade, I've never had a 3-month trade in my life. 3 months I was in pound US dollar. They're just, everything's extrapolated out because these ADRs are down. This thing's doing my head in. I'm getting out. I can't be doing with this morning. I'm going flat on the DAX. It's just not going anywhere. I'm not taking a loss on it. This pre-market, this is said about that iceberg order. Someone is sitting there selling the crap out of this morning. You can see it. It's obvious. It's not going long. So yeah, it's, you know, these ADRs basically are so small compared to what they used to be. It's just everything's taking forever. So it doesn't affect so much the profitability. It affects the time and how you get the money out of the market. I can't rely on making money as regularly. I will always make a roughly, you know, a similar sort of amount of money a year. It's just it doesn't come as normally. What am I trying to say? Regularly. Yeah. I would typically have maybe 1 or 2 months, which would be very small profit, 5% or a break even or a very small loss. It's gone. What seems to have happened, and I have not really looked into it in any detail, so it's quite interesting to talk about it. What seems to have happened is as the market has contracted, what's happened is my P&L has become more erratic. When the market was bigger, my P&L was more like that. Yeah, that's probably a better way to say it. When the market was like that, my P&L was like that. As the market's got like that, my P&L has become like that. Yeah, so it's like the amplitude of my P&L's profit and loss swings has been extended because the market has contracted. Partly because it makes it harder for you to get in and out of positions. I've taken way more aggressive drawdown control losses this year than I've ever taken, because I've taken more aggressive drawdown control positions this year, because I've got more frustrated with the positions going sideways for 5 weeks at a time and me going, right, screw you, I want out. Like I'm saying on the CAD Swiss, it's just annoying at the moment to have to sit in something for nearly 2 weeks like that. Yeah, so you sit there for 3 days, you get one move. You sit there for 2 weeks. You sit there for 2 weeks, you get one move. Market used to do this. What the market does now is this. Yeah, you get a news event, then nothing happens. You get a news event, then nothing happens. Because we've never had a period where we've had sustained interest rates as we've got them now. We've never had a period where for 18 months solid, interest rates have gone up. We have in the 70s and stuff, not since I've been trading. It's a totally different condition the market is in now. It's not the same as it used to be. And it will get back to how it used to be, but not until this sorts itself out. That's got to sort itself out. That's got to sort itself out. 2025 is when we're talking about getting that sorted out. So we've got another year of this potential. The market's scared of doing stuff because it doesn't know where anything's going. Where's this going to go tomorrow? The New Zealand dollar interest rate. No one's got a clue, because this isn't coming down as fast as it should be. No one was expecting it to get there. No one was expecting that to be that high when we got there, and no one was expecting their unemployment to go up, even though we've got inflation at those levels. It's all, the economics have changed. The market has changed. The thing that hasn't changed is the stock market. So add that into your portfolio, basically, is what I've done. So just got to diversify. Okay, DAX is starting to break short. If we break this low, so if you want to get into this, I'm not going to bother today. That's your play, basically. Just try and get in short on a retest of the lows, I think, today. Assuming we break, which we haven't done yet. But it looks like it wants to. We will see. Looks like a rough night at the office. Oh dear, Franco's had a rough night at the office. Been low profile last 3 sessions, regrouping my forces, got smacked around last week. That's exactly what I'm talking about. You know, the weeks at the moment are so much less predictable than they used to be. You know, these moves that we're getting on the stock indices are just exponentially bigger, faster, longer. But you know, and like I keep saying, we've never been in a market this volatile, this bare volatile market. We just haven't experienced it before. It's just weird. No one really knows what to do in it. By the time you adapt to it, it'll go back to normal market conditions, and then everyone will be getting, that's not how it was over the last year. No, you've got to change. You've got to adapt. This is why EAs don't work long term. Most EAs won't work long term because most EAs use pips. Pips change. If you use any EA that uses ADR or average true range, it'll work fine on all market conditions. But anything that works on anything but an ADR or an ATR measurement is going to fail. All strategies will fail because the market changes. If the market changes, your pip count changes, you're screwed. Got to adapt. Morning, Chucks. Do you think the changes like automatic drawdown may also made a difference to the P&L? Yeah. But that's why I turned it off. Because it's very difficult to adapt. Just trying to think of an analogy you could use in real life. Like switching from an automatic car to a manual car. Yeah, it takes you a while to get used to it. Yeah, switching from manual drawdown control to automatic drawdown control takes you a while to get used to it. But if you switch from an automatic to a manual car, you might decide after 3 months don't like it and you'll go back to automatic. I've switched back to manual because I didn't like automatic drawdown control. The problem with automatic drawdown control, and it's not a problem, it's a difference. It's personal preference. Something will push down, right? So look at the CAD Swiss as a good example because that's what I'm in. I did that myself. Yeah. The EA would have done drawdown control on that position there, 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 and there, right? I didn't feel the need for that because there's no point in doing drawdown control there. Yeah. It's more likely to do that, which is what it did, which is why I got these positions off and did drawdown control later. Automatic drawdown control is a blunt instrument. It goes, if price moves X, do Y. Yeah. If price move X and I see support, I do not want Y done because support will likely hold. Therefore, why take a loss when you can see a bounce? Yeah. So but if you can't see support and you can't predict a bounce, then automatic drawdown control is better for you, isn't it? It's different for everybody. Again, this is why the Bootcamp is very woolly in its when to do drawdown control, when to do aggressive drawdown control, because everybody's going to have a different psychological level and a different thing that they see on a chart. Somebody that hasn't been trading for long is going to struggle finding support resistance levels and seeing support and resistance. Yeah. Someone will see that chart there and they'll go, that isn't support and resistance because that doesn't line up with that, or that, and that doesn't line up with any of them. Whereas I see that as a support resistance bounce. But that's how I see it. Give it to 10 other people, they'll see it in a different way. So whether you do aggressive drawdown control or drawdown control at a different point, it's going to depend on how you see the chart. There isn't a right or a wrong, because if I see that support bounce there and it doesn't work out, you're right. If it does work out, I'm right. What's the odds of it working out? Same for both of us. Neither of us know whether it's going up or down. It is going to do one of those things. I don't know which. When it got back to here, did we know that that was going to turn into resistance again? No. Do you even see that as resistance? No idea. Doesn't matter, does it? The odds are the same. And this is, trading is about extracting money out of the market when the money is available to you. The market makes the money available to you based on your decisions in the market. Your decisions in the market are not right or wrong. They're just what they are. You've got to just accept what you're in and deal with what you're in as you get it handed to you on a plate. However, I don't want to take tons and tons of losses unnecessarily, which is what I'm finding at the moment with the aggressive drawdown control, with the drawdown control in the EA. But that's because I had it set fairly tight. If you set it to 2 ADR before it does a drawdown control, it's not going to do a lot of loss. But then again, it's not going to do a lot of control of your drawdown either, is it? You know, there is nothing cut and dry. There's no better way or worse way, but it certainly affected my P&L a couple of months. I had months where I was looking at this and going 4%, but I had a really good month. It did a lot of drawdown control. And then all those positions it did drawdown control on played out as I thought they would play out. And I took those losses unnecessarily. It's a fine balance. When you're trying to scrape 10% out the market or 15% out the market, you can sit for a lot longer because we're using small position size. We can survive a lot longer than everyone else can. If you're trying to scalp 10% out the market, every second is going to make the difference between your month being profitable or loss. That trade I just got out of there is the difference between today being a profit and a loss. That decision there was a knee-jerk reaction to what I saw on the chart. If I'd have let that get down to there, that wouldn't have been a $36 win. That would have been a $300 loss. That's a bigger percentage of my account than that, isn't it? You know, so scalping is a totally different mindset and a different way of trading. You've got to be more nimble. Not as much fun, as far as I'm concerned, but a lot of other people love it. People thrive on it. You know, look at Kunal Desai at Bulls on Wall Street. He lives for, but you can see he's hyper all the time. I'm not. I'm much more relaxed as a trader. Different traders have different personalities. Different personalities suit different trading styles. You've got to find yours, and you won't find it until you've done everything. You've got to try everything. Until interest rates start coming down, then, yeah. Potentially, the market has been very different as interest rates have been going up. Will it be back to normal as they come down, or will we have to go through that stage again before we get to normal? Don't know. I've never been through what potentially could be an 18-month interest rate drop either. So I don't know the answer to that. We will see ADRs pick up. So the first sign of the market getting back to normal will be ADRs picking up. Yeah, when that gets back up to the 250s, 300s, I'll be more confident that we're getting back to the old days. We may never get back there. I have no idea. World changes. Maybe this is the new norm. And if it is, you've just got to adapt to it. Lower time frames. You know, if this suddenly starts contracting more, you might find me trading M15, M1. I don't know. I might have to trade M15 RSI extensions using the 1 minute reversal alerts. No idea. When something becomes less effective, you then look for ways to make it more effective. Morning XR update.news. Euro pound, I am in from the 22nd of November. That's a baby position. Yeah, so we come down to support at the moment. Weekly support. That's a previous resistance. If it doesn't, obviously just go from there. But you've got that propulsion gap to retest. You've got another propulsion gap before the monthly low as well. So if this doesn't go from this reversal here and retest these propulsion gaps, you'll come down and test that and maybe test that and then go. You know, this is prime example today, isn't it? Total frustration. Part of the job. It's not a fun part of the job. I feel like the last 2 years of new gambling orientated traders have added to the volatility in FX. Retail doesn't. I mean, if everybody that's a retail trader on the planet hit the buy button on the same instrument at the same time, it wouldn't move. We contribute less than 3% of market movement. It's just not going to happen. I don't think that makes any difference. It may be that the market has had to hunt for more orders, making it more volatile. So institutions hunt institutions. So it may be that has added to volatility. Possibly. It's certainly not prop, because prop has never placed a trade on a market in its life. It's all demos, isn't it? It's all demo accounts. So it doesn't affect liquidity because it doesn't exist. It's fake. So it's not that. But there's a lot of gambling oriented traders, but they're all gambling with $100 and $1,000. You know, I could drop $10,000 right now on a short. Market wouldn't even know it is there. It'd just be eaten by a bank. They're placing billions of orders. Billions of dollars. This is a $7 to $10 trillion a day market. If I dump 100 grand in here, it's just going to go maybe like that. It might pip. That's about it. We tried it when I used to trade with a group. We when we first started trading with decent size, we all hit the button at the same time on the same broker and nothing happened. And we dumped quite a big order in. Nothing happened. Just doesn't. We don't. We are insignificant. We are the poo of the fly on the bottom of the shoe. We're that small. There's a good analogy, isn't it? You are a fly poo on the bottom of someone's shoe, and the shoe belongs to the bank. And the bank is the small guy out of the other guys, which are all bigger than him. Right. That's what I've got for you today. This is still not moving anywhere yet. So today's news is 3 o'clock. So we'll look at that when we do the New York session and see basically real mixed results out of consumer confidence. We'll see if we get any movement off of the US this afternoon. But the main market movers tomorrow are going to be the Aussie and the New Zealand, both commodity pairs. So there's a potential for some decent movement off of those tomorrow. Oil didn't go anywhere yesterday, just filled the gap. So yeah, nothing really moving yet today. A bit of a drop on the pound, or a bit of movement on the pound rather. That FTSE probably still be coming down. Big rally on the pound, so we should see, in theory, the FTSE dropping. So we've got itchy nose today. Just open my Axie account again. These be taking forever. There we go. So FTSE dropping again, pound rallying. So whatever the index does, or whatever the currency does, the index does the opposite. So nice big drop. So if you got into the FTSE today, that was your open. Very nice risk reward on the FTSE. But yeah, pound's moving. Euro's rallying a little bit as well. Hence the DAX should be dropping, but it's not. Little bit of weakness on the yen. But apart from that, not a massive amount of movement. So yeah, come back and have a look at it this afternoon. So yeah, back to 20 this afternoon for the US session. Obviously tomorrow morning for the Frankfurt session. DAX, just literally nothing happening today. If you are using the stock index Hedge EA, you're not hedged on it. You are long only because we haven't broken the lows yet. Or if you're using the ORB EA, you're just long at the minute, but you're break even. So if you haven't gone anywhere after this long, the break isn't on today, is it? The edge of the strategy is the break. We haven't got it. So I dump it today. Annoyingly, it missed target by that much. Frustrating today, but is what it is. So yeah, I will see you guys this afternoon, 2:20 for the New York session. If you're not around this afternoon, back tomorrow morning, 7:50, and we will trade Frankfurt again. And yeah, anything you need, let me know. I'll be in Telegram. Other than that, we'll see you guys next time. Have a good one.